But how will all of those remarks and, of course, the handover from Wall Street impact our own markets? Our research team is joining in with how the trade setup looks like, the stocks that are likely to be in the news, and, of course, the setup on the F&O side of things as well. It's been that kind of a week, right, for the markets, where we had that very, very sharp sell-off on Tuesday. And since then, we are looking to recover from those lower levels. We've had 2 days of gains now for the index. But, of course, the problem remains that there continues to be resistance at higher levels. The Nifty made an intraday high of 23,426 on Tuesday, but since then has not managed to close or even go to those levels after that sell-off that we had in Tuesday's trading session. But based on that, the recovery that we have seen as of now, the Nifty is absolutely unchanged for the week, as is the Nifty Bank. But the pain, though, lies in the broader markets. And despite the recovery that we saw in Thursday's trading session, the mid-cap index is down 1%. And the small-cap index, too, is down close to 2% for the week. Now, the handover from Wall Street is a positive one, but of course earnings for our own markets remain a concern. And mid-cap IT, the results that were reported and the reaction that we had yesterday, that provided some comfort, be it from Coforge, Persistent, or even from Zensar. And results today from Amber, Indus Towers have positive ones. Amber beat estimates. Indus Towers too saw some sharp improvement in its earnings. So that will be an important one to watch out for as to how the broader market earnings react, and a lot of that will hinge on how the mid-cap and the small-cap indices behave in today's trading session. But today, among the Nifty stocks, we have JSW Steel and Shriram Finance reporting results. Some other important results include the likes of GCPL, DLF, Indigo. So a lot to watch out for in the broader markets as well in today's trading session. So for now, the GIFT Nifty is indicating a positive start for our own markets of close to 40 points. We'll see how the day goes by. Over to Vamakshi now, who would list out the stocks that you need to watch out for today. Vamakshi, good morning. What's on your list?
Well, good morning, Hormaz. Let me first start off with Dr. Reddy's. The company reported a revenue growth of 16%. This is more or less in line with what the street was expecting. The margins have come off from 29.3% to 27.5%, and the net profit is seeing an uptick of 2.5%, and this is below what the street was expecting. HPCL's revenue saw an uptick of 10%, coming in at 1.1 lakh crore. This is more or less in line with the street expectations. The margins have improved sequentially from 2.7% to 5.4%, and the net profit at 3,023 crores is much higher as compared to 631 crores that we saw in the previous quarter. Amber Enterprises has reported a beat across the board. When we look at the revenue, that is seeing an uptick of 65%. The margins have also improved from 6.06% to 7.4%, and the company this time around has reported a net profit of 37 crores as compared to a loss last time around. So overall, good set for Amber Enterprises. United Spirits revenue seeing an uptick of 14.4%. The margins have come below expectations. The margins have contracted by nearly 20 basis points to 16.6%, and the net profit too is seeing a decline of 4.3% below what the street was anticipating. Cyient, on the other hand, revenue growth of 2.4%. This is an improvement as compared to the previous quarter. Margins have contracted from 12.5% to 11%, and more importantly, the company has given its DET revenue growth guidance. They have cut it from flat to minus 2.7% for FY25. The EBIT margin also has been lowered from 16% to almost 13.5%. Apart from that, keep an eye out on Jyoti Structures. They've received a notification of award for a project worth 741 crores from Power Grid. Indus Towers reported a good set of numbers, but apart from that, they will also be entering EV charging infrastructure, and they have gone ahead and launched the pilot EV charging stations in Gurugram as well as Bangalore. And lastly, keep an eye out on Patanjali Foods. FSSAI has directed the company to recall red chili powder, and this is mainly on account of non-conformance of FSSAI regulations.
Vamakshi, thanks a lot for that. We'll keep an eye out on both Indus Towers and Amber Enterprises along with those whole host of broader market results. And lastly, Mangalam joins in with cues from the F&O space. Mangalam, good morning. What's the data indicating?
Well, the data is indicating that maybe, the bottom in for the market is in place in the near term. Why do I say that? Because the frontline indices, yes, yesterday they did well for the Nifty, up around 0.25%, but we had the weekly options expiry play out as well. So the street was hoping for some resistance around 23,250. That's what happened. So despite the Nifty IT moving about 2%, the Nifty Bank was the one that pressurized the Nifty on the way down. However, the broader markets did a lot better. So you had 1% gain for Nifty, next 50, almost 2% for the mid-cap index, small-cap index doing well as well. And typically, these indices do a lot better when the street believes that maybe the lower end of the market is protected. And that's exactly what happened. 3 days in a row, the Nifties managed to hold on to levels around that 23,000 mark, just below 23,000 for Jan 21 and 22. And for Jan 23, it was a little under 23,100 itself. And when there is limited protection or more protection on the downside and limited visibility there, the FIs cover their shorts as well. So a mild, beginning of unwinding of shorts is what we saw yesterday. They bought about 718 crores in index futures, unwound about 17,800 short contracts, with their net exposure now standing at negative 3.28 lakh as against negative 3.5 lakh itself. And that's visible in their long exposure as well. If you look at it over the last 4 trading sessions, it's increased from 16% to 19%. The only thing that is keeping the lid on the gains is the FIS selling in cash market, which yesterday as well was close to around 5,500 odd crores. If you look at the options, the 23,300 call and the 23,200 put, along with the 23,000 put, that tells you that we are seeing support at 22,950 and resistance around 23,450. So the support and resistance range for the Nifty comes up for you.
Interesting. Important levels to watch out for on the index. Mangalam, thanks a lot for that.